Welcome back to Chairman's Briefing. Here we cover mining stories of the week. I'm Rachel Lee. Let's get into it. The convergence of weak manufacturing data in the U.S. and typical September jitters, which is historically an unfriendly month for markets, weighed heavily on most asset classes as trading picked up after the Labor Day weekend. Despite Powell's recent pivot, the Fed is all but guaranteed to ease rates later this month. The S&P 500 was off by more than 2%. The Nasdaq 100 saw its worst start to a September since 2002. And Wall Street's fear gauge, the VIX, pushed substantially higher. Now, though our primary focus here at the Chairman's Briefing is metals and mining, it's impossible to ignore the market action in NVIDIA. The AI heavyweight marked the steepest single-day decline in market value for a U.S. company. That's $279 billion in market capitalization. This is a major indication that investors are becoming more cautious about emerging AI technology that has fueled much of this year's stock market gains. Gold prices stayed fairly steady throughout the rocky start to September. However, gold mining stocks didn't fare as well. The big mining companies, which is tracked by the GDX index, saw some losses. But it was the smaller miners, measured by the GDXJ, that really took a hit. These junior miners dropped almost 5% just on the first day of the month. This price weakness may represent a buying opportunity for those wanting exposure to the precious metals arena. But the pressing question is, will gold's tailwinds be enough to overcome the September curse? Since 2017, gold has faced an annual September challenge. Here's the pattern that we've seen so far. During the volatile summer months, traders often buy gold as a defensive move before heading off on vacation. It's like a financial safety blanket while they're away from their screens. But come September, when we're back at our desks, we typically see a sell-off. This has happened consistently since 2017, with gold dropping an average of 3.2% each September. It's almost as if traders are unwinding their summer hedges. September is also traditionally the dollar's strongest month, which means that traders using other currencies can buy less gold with their money. But as I mentioned earlier, U.S. Fed Chair Jerome Powell has signaled that it's time to lower interest rates. The speed and magnitude of these cuts may be key to determining whether bullion maintains its momentum. Looking beyond this month, though, as Goldman Sachs continues to hold a bullish target of $2,700 per ounce for early 2025, and have also opened a gold trading recommendation for 3 reasons. First, Goldman Sachs analysts said that they believe the tripling in central bank purchases since mid-2022 on fears about U.S. financial sanctions and U.S. sovereign debt is structural and will continue. Second, they said that imminent Fed rate cuts are poised to bring Western capital back into the gold market, which is a component that was largely absent of the sharp gold rally observed in the last 2 years. And finally, analysts said that gold offers significant hedging value to portfolios against geopolitical shocks, including tariffs, Fed subordination risk, and debt fears. A rout in the price of lithium, triggered by a supply glut and weaker than expected EV demand, has turned price chart trajectories upside down, from buoyant to bleak. In the following chart, shown by the blue line, we see the downward spiral of lithium carbonate priced in yuan. And headlines like these from 2 of the largest lithium producers have become the norm. Lithium bust spurs Ganfeng to delay project capex as losses hit. And Tianqi Lithium swings to loss on battery metals price plunge. General Motors is delaying the second tranche of a planned $650 million investment in Lithium Americas Thaker Pass lithium project until the end of the year. The first tranche was completed in February of 2023. Cited for the delay is Lithium America's need to secure a $2.26 billion loan agreement with the U.S. Department of Energy to develop its project, which is hailed as the largest known M&I resource in North America. This is a clay-hosted deposit that's expected to produce 80,000 metric tons per year once at full capacity. There's a rush to close these loan agreements with the U.S. Department of Energy while Biden is still in the White House. If Donald Trump is elected, his pledge to end the electric vehicle mandate will deprive projects like Thaker Pass of critical development funds. From mere pennies to nearly $18 per share, Patriot Battery Metals was a high-flying junior of the previous lithium bull cycle. The company's valuation has been dealt a severe blow, though, along with the rest of the sector in recent months. Attempting to call a bottom in the stock has been a mug's game, and this is all despite a significant mineral resource upgrade and PEA announcement. The Biden administration is considering intervention, using federal funds to prop up critical mineral projects on U.S. soil. An official from the Energy Department told Politico that the potential new policy would involve setting a price floor and agreeing to pay the difference when market prices fall below the threshold for critical minerals produced in the U.S. Quote, "If we move forward on anything like this, the intent would be to give the nudge that is needed to set off the flywheel versus create a permanent subsidy or cushion for a particular sector or company going forward." In late June, Paladin Energy declared its intention to take out Fission Uranium in a deal valued at 1.14 billion Canadian dollars. Flash forward a couple of months later, and the takeover is far from a done deal. The deal was contingent on securing at least 2/3 of shareholder support by August 26th. Now, Paladin fell short of that mark as nearly half of Fission's eligible shareholders failed to submit their proxies. In a statement, Paladin said that the majority of the votes received to date are in favor, but are not sufficient to approve the transaction. A special general meeting has been postponed to September 9th. Hudbay Minerals is now in receipt of the second last permit required to begin the build-out of its Copper World project in Arizona. The 85,000-ton per year Copper World project could boost Hudbay's output to roughly 250,000 tons beginning in 2029. Copper World has a proven and probable reserve base of some 385.1 million tons, grading 0.54% copper, plus molybdenum, gold, and silver credits. Securing an air quality permit is the company's next objective. The last key state-level permit, the air quality permit, continues to progress as planned and will mark the completion of one of the 3 key prerequisites in the company's prudent sanctioning plan for the project. With expectations of more than 350 ounces, Ghana is slated to commission its first large-scale greenfield mine in more than a decade this November. The Cardinal Namdini mine, which is owned by Cardinal Resources, has a probable reserve base of just over 129 million tons at a grade of 1.14 grams per ton gold for roughly 4.76 million ounces. This ambitious mine plan comes after a decade of declining exploration activity in the West African nation, which has impacted big miner outputs and the flow of new projects. Ghana's last major commissioning was back in 2013 by mining behemoth Newmont. In 2023, Ghana produced 4.03 million ounces of gold, driven largely by increased output from small-scale and artisanal miners. According to sources, the Biden administration is close to announcing that it's going to block Nippon Steel's acquisition of U.S. Steel. This is amid growing bipartisan political opposition to the $14.9 billion deal. Next, First Quantum Minerals is seeking compensation from Panama for a stockpile of semi-processed copper ore stranded at the company's flagship mine as part of wider arbitration over the shuttered operations. The material, which is worth up to $340 million at current copper prices, has sat idle for months while the Panamanian government determines whether the metal was mined before or after Cobre Panama was ordered to close last year. First Quantum has warned that the matter must be resolved urgently since the stockpile can degrade in value and poses an environmental risk when left idle. And that's a wrap for this segment. Subscribe to get these insights delivered to your inbox every Thursday, or if you prefer to hear your news on YouTube, smash that subscribe button and bell notification. Thanks for being a part of Chairman's. I'll see you next week.